Good morning, good afternoon. How's everyone doing? Morning, Sam. So far, so good. It was a good week. Samus, I hope I don't piss you off when I bring up other stocks that other folks are talking about. Nope, not at all. In fact, I'll thank you for putting the suggestions that let's talk about Palantir. This is a stock that I have not done a deep dive earlier. So thanks, Sam, for bringing that up. So yes, I did. I spent some time yesterday late evening, today morning, to go through Palantir, trying to understand its business. I do hold a very small position, but I've never done a deeper analysis into their products, what they do, what their competitive advantages are, blah blah blah. So yeah, so I spent some time. So we're gonna go through that stock. And here's what I mistake I already did. I thought I'll ask others what that stock is, and I gave up the name anyway. So it's all good. Okay. So Russian tip ranks, dude. I don't follow any of them. Again, no one knows what is happening in the market or what will happen in the market. So be really careful around those whole tip ranks and everything else. Yes, gotta do your own due diligence. Gotta do our own study. But it's an exciting company. That I would definitely say. All right. So yeah, we're gonna talk about the company. We're gonna spend some time doing a deep dive on a company, and of course, as always, we'll look at the general markets, what happened in the market, and some interesting news, charts, tweets, or any other discussions that you want to have. Always open for that. Okay. Everyone now feeling okay in the markets? Markets are really good, at least last week, but 1 week doesn't define in either way. One good week, one bad week doesn't matter. But yeah, people have a habit of looking from week to week. So last week was okay. And if you are stayed in the market, portfolio looks way better. Every stock options I bought last year is deep red. Yeah, I don't know what can I say about that options you bought, because it's all on an average. Option buying just really doesn't work. It's the implied volatility on an average is always more than the actual volatility, so you end up paying more than what the stock would actually move, and in long term it doesn't work. So that is why I don't buy stock options. Those are it really needs stock to do a lot more work to make money in buying stock options. But especially this year, including last, it's been great for option selling. I mean, look at the amount of a premium that we can get. It's only this week I saw premium because the VIX went down a little bit. Markets becoming little. It's still VIX is higher than normal, but I saw a little premium now squeezing this week. But otherwise, these last 3 months have been great in terms of the amount of premiums that you can get, either if you are bullish on a stock by selling puts, or you're still holding the stocks, don't want to chicken out of the market and reduce your cost basis. So that really worked out well for me, because I'm not, as I've been talking about, I think every week, I'm not selling my portfolio, right? I need it like five years later. So what do I do? It's been these past 2-3 months have been amazing in terms of reducing the cost basis. So that's all have worked out. From my perspective, selling premium has been worked out really well. in over past 3 months. Buying options, probably not. They're too expensive to buy. Once in a while, yeah, I'll also take a gamble, but those, Samuel, that will be a very small amount of a portfolio. I want to focus more effort on things that actually work most of the times. So Jay says, thoughts on Snap closing price yesterday? They quote 780, but market closes 690. Look at 1 minute chart. Snap, is it Snap or some other stock? Snap can't be 780. Must be Shop. Okay. 780. I think I saw flash news across mobile saying after hours it went down. But okay, 780 was there and then 700. But I don't see much on even after hours also. But I saw flash news scrolling over my screen on my phone saying Shopify down after hours. Yeah, it looks like the last one happened at 780. Who knows what happened here? Could have been this fake up to 780, came back to 700, 712. All right. So talking about today, we're going to do a review of a company. But today is our first session after daylight saving time. So I hope all of us have moved our clocks forward. It's time for a spring, time for more sunshine. And I don't know, even after so many years, I still have trouble adjusting to that 1 hour of less sleep and, missing out some activity whenever the daylight saving time changes. But yeah, it still takes a couple of days to get adjusted to the fact that, I lost 1 hour of sleep. But yeah, spring is in the air, and at least this week, more sunshine in the portfolio as well. I hope same is the case with you, especially if you're a growth investor. Invest and your portfolio constitute a lot of growth companies. So I'm sure this scenario also works out for you. So it's a good start to the spring. That's all I would say in the summary. More sunshine and spring in our portfolio. But let's see how long does it continue. So overall macro, the biggest news for the last week from a macroeconomic perspective was Fed hikes interest rates, right? And then we saw that the stocks rally, which is generally not what happens, right? When Fed hikes the interest rate, that's generally bad for stock market, but we'll see. So what happened? First time since 2018, Fed actually raised the short-term lending rate by 25 basis points. So now the current Fed rate will be between 0.25 to 0.50. So we always say that the prior to this hike, the rates were near zero. It's not exactly zero. No one, it's only the banks who know, those who do the interbank transfers overnight. They do it on a funds rate, but it was near zero. So now it will be, a little above 0.25. So that was the biggest news that finally happened. We've been talking about it for a few months already, and but no, it wasn't surprising. I mean, one thing which Jerome Powell has done right is to set expectations of the markets time and time again. Even in the latest testimony to the Congress, he was very clear. We're going to hike only 0.25%, and that's exactly what Fed did. Announced on Wednesday, and the markets ripped higher. There are 7 rate hikes expected in 2022. So apart from the impact on market, we as a retail investor, we as a consumer, will be impacted by federal funds rate. We are not directly impacted because we're not banks who have to borrow do overnight borrowing, but we are impacted by if you are invested in stock market. Right? Generally, when the Fed fund rates are lower, it means the cost of borrowing for the companies is lower. It means it is good for the companies that need money to grow, right? Those growth stocks, because the money is available at a cheaper rate. They can borrow that money cheaply and invest in growth. Increase in Fed fund rate generally is not good, but we saw market surprised everyone. Right? After Fed came and told we're going to increase the rates, market was on Friday, on Wednesday, market was really ripped higher. So let's look at the Wednesday chart of SPY. Let me bring that up. This will be Friday, Thursday, Wednesday. That's a big rip higher. So what gives? If the Fed funds rates go higher, it's more expensive for companies to raise money. It means their earnings will get impacted, but markets ripped higher. Again, time and time again, we have seen market has a tendency to surprise at the last moment. Still, in my perspective, I think it's still the same case. Buy the rumor, sell the news. Market had already priced in over past few months all these increases and all this stuff. So yeah, if you're waiting for this news, this actually the market moved opposite to what it should, given the traditional wisdom, right? That the Fed funds rate are higher, so the borrowing cost will be higher. Not good for companies, not good for stocks. But this week, that wasn't the case. So it's a good for stocks. What else this Fed funds rates will impact? They will impact fixed income investors, especially those who have approaching retirement, have following the traditional 60-40 bonds, stocks to bonds, a mixture in their portfolio, or any other kind of a fixed income products. Whenever the interest rate increases, those fixed income instruments, their prices will fall. Those are inversely correlated. So if you're holding bonds, the bond prices would have fallen. It also impacts potential and current home owners. Right? If your mortgage, if you are on a fixed rate mortgage, yeah, it doesn't matter what the Fed funds rate is, because your mortgage is fixed for the period of your loan, unless you're looking to refinance. But there are many borrowers who will be on the adjustable rate mortgage, right? ARMs, in which you might pay very low percent to begin with for first 1 year, 2 year. I don't know, because I don't have adjustable rate, but I think there are 3-year fixed and then adjustable. There are multiple flavors of those adjustable rates. But if you're on any of those adjustable rates, be ready to see adjustment in upward direction for your mortgage loans. So make sure your finances will take care of any increase in your monthly mortgage payments. Or if you are looking to get into housing market, or if you wanted to refinance, not a good time to refinance anyway, but if you're trying to buy a home and now in the market for shopping for mortgage rates, loans, not good time, because all the mortgage rates have also gone up. First time now mortgage rates for 30-year fixed has gone beyond now 4%. This is the highest in last 3 years. So not a good time for borrowers, whether those are the homeowners or any other type of loans, because at the end of the day, every banks, they will start to price their loans offerings based on what the Fed's fund rate is. So we should all be ready to expect that the mortgages will go higher. The interest rates on personal loan, car loan, any other sort of a loans, student loan, they will move higher because the Fed funds rate have gone higher. The cost of borrowing for the banks have gone higher. The cost of borrowing for the companies themselves have gone higher. So they will still retain their margins. They will pass on that cost to the lenders. So not a good time for borrowers. And considering the fact that there will be 7 rate hikes which are expected, if we are laden with the debt, we might want to go back and look at our portfolio and finances really closely. Other things that could be impacted by Fed funds rate is deposit rates, but I don't see banks taking action quickly on that. Banks and the financial services firms, they'll be very quick in following Fed funds rate when they have to increase the interest rate on the loans, but they will slow in increasing the interest on the deposits that we hold with the banks. If you're holding want to hold CDs, etc., so those rates should go higher, but probably generally takes a longer time for the CD rates to go higher. So yeah, it will have impact on us, not directly but indirectly, because we are a consumer of these financial services. So we will be impacted by it. Now, depending on how your portfolio is, how your personal finance situation is in terms of the debts that you hold, the impact could be different. So very personal. It will impact each one in a different way depending on your own personal situation. So from a stock side, what happened? Stocks moved higher for the week. We already looked at, and it was across, I think, all the stocks. Reason? Falling oil prices. So we saw crude, WTI crude, West Texas Intermediate, which is where a lot of the US oil gets priced. And then there's another one, which is Brent, which is where the European oil gets priced. But in any case, the crude WTI fell from what recent price was around $130 per barrel. Now it is back to what WTI. Will I get that on Thinkorswim? No. Or where do I get WTI? Yeah. Oh yeah, close to 120, now to 103. Yes, if you don't buy your house now, it is probably higher cost later. Yeah, inflation going high, and if they continue to stay high, will inflate all the assets, which would include also the house. So, but again, your cost of ownership of that house and the mortgage also goes higher. So, oops, wrong document. Hope of a peace deal between Ukraine and Russia, and I don't think the deal has been formed yet. It is just a hope, because that they are talking, and maybe market could move completely opposite direction if the peace doesn't happen, right? So again, it's impossible to predict what will still happen in the market. Will the huge rally that we saw, will this continue next week? No one knows. There are a few, it's only in hindsight. Now we can look at why, especially these growth companies have gone higher, because it looks like right now it's a risk off. Oh, sorry, risk on, right? But yeah, we are a little more certain about our future. Period of uncertainty is over. Russia and Ukraine will get into some peace deal. Fed already came and raised the rates. One thing which I think is pretty clear, whether the news is good or bad, market, as long as the news is out and confirmed, markets will calm down, right? What market doesn't like is uncertainty. Even if it's a bad news, but if it is certain, we know how bad it is, then it's still good for the markets. And I think this is what, after Jerome Powell confirmed on 0.25 and what exactly Fed's going to do over this year, okay, the period of uncertainty is over. We were waiting for the interest rate increase, which has happened. Life is good, and markets ripped higher. SP says, let's look for stocks who has plenty of cash and no need to borrow. Yes, the cash-rich companies always do good in period of uncertainty. Number two, when the inflation starts to kick on, kick higher. So one good way to look at this is the companies that gives you dividend. Right? It means they are making money, they are making profits. These are the companies which actually generate profits from the businesses and hence able to give the dividends to their shareholders, right? Not the companies that actually buy or borrow to give dividends, but the real companies which have been giving dividends. So best one to look at dividend aristocrats, right? So dividend aristocrats are the list of companies. Well, I'm not a big dividend investor, but depending on where you are in your financial journey, dividends does give a steady stream of income, which if you need for your living, then then we might want to look at dividend aristocrats. So dividend aristocrats, let me just pull up where I can find a list. So that's a list of companies that have been increasing their dividend for 25 years. Right? It's not that they've increased the dividend just for this year. So they have to continuously increase the dividend. Oops, does it have a list or not? Okay, it does. Yeah, so search for a dividend aristocrats. So these are the companies that have been increasing dividend for 25 plus years, not just giving, but increasing it. So it means these are the companies, may not be growth companies, probably not, because none of the growth companies will return money to shareholders. They would rather invest it back in the businesses. But these are the companies which are steady state companies like Home Depot, companies like Lowe's. You may not see a capital appreciation in terms of the stocks, but these are the companies which generate cash from their businesses, have net profits, and will return those to shareholders. Right? Then there are, if you're not want to look at individual companies, I think there are ETFs which are based on dividend aristocrats. But in era of increasing interest rates, these dividend paying companies become more attractive. Right? Other could be utilities, right? Those are again dividend paying companies could become attractive. But before investing in any individual companies, you may want to look at the individual company's balance sheets really well. Right? So maybe pick up a dividend aristocrat ETF if you don't want to spend time on analyzing individual companies. So at least you will take out the risk of, you'll take out the company risk. So that is an option to get regular stream of income. Or the other way to get a regular stream of income if you are not a dividend investor, is what I focus on is basically selling options and generating our own stream of incomes. So here I found, I think on a Wikipedia, I hope it is up to date. It does have 64 companies, the other, and here's a list. So we got 3M, pretty steady business, Abbott Labs, AbbVie. Again, these are very well established businesses, have been there around for years, at least 25 years, because that's the minimum qualification. And yeah, pick up whichever companies if you want to. And some of them actually are also increasing their businesses, right? They're also growing. But yeah, these are the dividend paying companies. For those who are dividend investors. So overall, from an indices perspective, we are still down year to date, right? Dow Jones is down 4.5%, S&P is down 6.5%, NASDAQ is down close to 11%, mid cap is still down 5%, but much better than where we were previous week, right? So still not out of woods. One green week does not define or should not, let me put it this way, should not define our investing strategy or our portfolio, right? Now, we should not now start to go all in because this week the markets have turned green. The way the markets have turned green, equally it could turn in the other way around. I mean, still, if I look at from an uncertainty perspective, probably I have that, I think, VIX chart somewhere later. If you look at I think VIX is still hovering close to 24, right? Or it is definitely down from 30 plus, but 24 is still higher. So we are not completely, there is still fear in the market. I mean, as it's also shown in the fear and greed index. So it is still, I still expect the volatility to stay in the market, and I'm setting myself up for taking advantage of that volatility. Right. That's all we can do. We cannot control where the market will go. It will go higher, it will go lower. All we can do is set ourselves up to meet the market where it goes. Make our portfolio resilient enough that we are not scared out of the market. Make sure we are appropriately position size. That's all we can control. We can control our portfolio. We cannot control what market does. So QQQ this week, it was up almost 9%. Same as the SPY was up almost 5%. Now, I feel sorry for those who probably had chickened out earlier based on what's been happening in the market. Now, we are already 9% behind where the tech companies are. Especially if your portfolio is more on the tech side. And if I had cleaned up my portfolio earlier, because over the last few weeks, what we are seeing is almost capitulation. Starting January, every time there used to be a dip, we saw the dip got bought over. But over past few weeks, it looks like most of the retail investors had finally given up, because the tax deadline is also approaching. For how long could you continue to invest trying to buy the dip and then see that it goes further down? So it is possible. Again, no one knows. I don't know. I've not looked at the data, but it's possible that retail investors like, okay, I'm done with this. I need to have some cash to pay for the taxes. My deadline is approaching. And could have cashed out, would have sold. And now the market's moved completely other way around. So this is, market always will surprise us. So let's not speculate in terms of what might happen next week, but let's stay in the market and meet wherever the market goes. Give ourselves plenty of room for error. So sector perspective is all green, except energy, because of the oil prices fell down. Otherwise, it's a pretty good week for the portfolio. Year to date, we are still down, right? But we'll see where eventually we end up into. So that's on overall our traditional markets or economic ego summary. Any questions so far? What were your reactions?
Vivek.
Go ahead.
I followed Justin, the Korean, and then he brought this Russian guy from Tipranks because he's kind of boring. Justin is boring. He's very, I think he's very solid, but I think he wanted viewership up, so he brought Justin, the Russian guy.
Yeah, I don't know, but I don't know this person. But one thing is pretty clear to me is good investing is generally boring. If you want a fun, if you want more of an adrenaline rush, Vegas is there. But a solid investing is generally boring, right? You look at a good companies, invest in them, reduce your cost basis, and let companies do the work. But most of the time, retail investors, especially the ones who came in the market very recently, especially in 2020, when every one of us became Warren Buffett, we were all used to trading or buying and selling based on news because it gives us sugar rush, but that's probably not good for portfolio. So I don't know about the person you're following, but if it's doing good analysis on a companies rather than just giving the tips on why they should go up, it might be a right person. I want to focus and follow the folks who tell me more about the business of the company and not just about the stock of the company.
Vivek, I tweeted what you said a couple months ago. You said the reason that China government has whatchamacallit, has Bitcoin is because of the a capture from criminals, right? So I think I tweeted that to him, and I included you there.
Justin. I don't remember probably.
Oh, don't worry about it.
Yeah.
But, but unfortunately, I'm not as calm as you two people.
Yeah, you might want to look at your portfolio and your position size. There are two things, and again, I talk to my friends also, and who will suddenly call me and saying, "What do you think about this stock?" I'm like, "Why are you so much worried about this stock?" Invariably, and this is always happens. There are only two reasons why I see investors get panicked out when the volatility happens. The markets are volatile. Number one, the position size is too big. And that's generally what I've seen is, hey, this is like 30% of my portfolio. I'm like, that's the reason why you're getting scared out or becoming over joyous when the portfolio does good. The individual stock does good. That's one reason. Position size. Look at your stocks, size your positions accordingly. Number two is your mismatch of investment horizon. Right? If you you need this money in next 3 months because you had your home down payment, which you put into this particular stock. Now the stock is down 20%. Now everyone, you're sweating, you're feeling nervous about it, you're losing sleep. Those are the only two reasons. When I talk to anyone who is becoming more anxious in the market, these are the only two reasons. I'm not, whether the company has gone down is generally not a reason, because the same or someone else might be holding the same stock, but is not disturbed by what's happening in that company or what's happening in that particular stock. So the only way to stay calm in any type of market is to make sure we are appropriately position sized. Number two is, hey, my timeline to expect return from this market is, um, you know, is not too aggressive. We are planting a seed. Can't expect fruits to be available tomorrow or a week later. So that's not. And I always want to focus on that. And sometimes if I feel little jittery about some stock, go back and look at it. Why has it become too big for my portfolio? Most of the time that would be the case. Right? Or, hey, I need money to pay for some bills which are coming due. Otherwise, there is no reason, absolutely no reason to be anxious about your portfolio based on what's happening this week, right? This week portfolio is green. It doesn't mean that it will stay green next week. So I'm not like jumping out of bed and celebrating. Yeah, it is green, you feel good, that's okay. But it was red, you felt bad, that's okay too. This is what markets always do. Sorry, a little spiel, but these are the only two reasons which I see invariably. So if you're feeling a little anxious about any of your holdings, go back and look at how big is that holding in your portfolio. Right? It's somewhere we might have crossed the line between investing and greed. All right, quick look at what's happened on the crypto side. Again, I spent this Thursday, we had some good discussions on crypto. We got some new folks over there. So we talked a lot, more than 2 hours looking at various projects. I'm not going to spend 2 hours, but a quick overview of what I saw last week. European Union, little bit of better news. So there was a bill that was drafted in EU Parliament to ban the proof of work mining crypto assets, which means Bitcoin itself, but that got defeated. So I don't think that anyone actually thought that this will actually succeed, but you have to go through this motion of, yeah, someone has tabled the bill, so you need to vote on it, and that was defeated. HSBC, the traditional financial services, it's a big financial services company with more than $3 trillion asset under management. Now can't be left behind. JP Morgan entered into metaverse. So last week, HSBC also entered into metaverse. And most of these companies that do is go and buy virtual land in one of those metaverse projects. Ethereum, the number 2 crypto assets, continue to move on its path of moving from proof of work to proof of stake, making it cheaper, faster, and more scalable. So they have now moved closer to their first milestone, which is merge. Those changes have been now put onto the test network. They will bake those. Generally, the way these changes are implemented is all those changes are put in a testing network. It will be baked into testing network for a few months. Then those will be put into the final production network for Ethereum. That's where the real transaction happens. Right. So another one, if you are into NFTs, which I am not, you probably would already be aware of these big changes that have happened on 2 big and very famous NFTs, collection of NFTs, I would say, the Bay Area Yacht Club and the CryptoPunks. The companies behind those kind of merged, or not really merged, I would say. The Yuga Labs, which is behind Bay Area Yacht Club, they bought commercial rights to all the CryptoPunks. So it's not a lot of centralization or monopolies happening even on the NFT space. And lastly, let's look at what's on the leaderboard. So cool. So risk is on, baby. Risk is on, right? And it's not just this time. We have seen the overall crypto market has kind of now becoming correlated to any other risk more risky type of investments. In this case, it will be high-tech growth companies. So overall, this week we saw all the NASDAQ going higher, little more ability to take risk. Investors feel a little more certain about the future, or what Fed could do. And the same thing also has percolated into the crypto markets. So overall, last 7 days, if we look, pretty decent. On top 10, everything looks to be green. Still not near anytime near all-time high. NASDAQ is still way down from its all-time high, but last week was good. So that's a quick summary on the crypto. I don't want to bore and go through the details unless anyone has any specific questions around it. I can always talk a lot more, but we do reserve it for our Thursday meetings. And let's look at some of the other tweets, news chats. This one from Austin Lieberman. My portfolio is up 20% since 311. Must be Cathy Wood type of stocks. That's what he must be holding. I share not to brag, but because it's real life example of how missing some of these 3 to 5 best days can destroy your returns. I completely agree with this. If anyone had chickened out earlier and now wants to get back in, especially if they're a growth investor or even a regular investor, you are now like digging, you have to dig up from 8% lower. Right? So tune out the noise. That's way more important. Don't look at your portfolio at all. If you don't need that money from it, why do you have to log into your brokerage account if it increases the blood pressure and forces you to take some action? So sometimes I feel that we should have made these apps little more difficult to use, so that it prohibits us from making an impulsive actions. Neither the impulsive behavior, impulsive purchase, whether it's on a purchase side or whether it's in an investment, doesn't really work out good. And it's not just me saying. So there is a study done, attention-induced trading. This was conducted in October 2021. If you want to, you can go through this whole study, but I will just bring up an extract from the study, right? So they looked at the influence of the financial innovation by fintech brokerage on individual investors, right? It's not about the institutional, but more about retail investors, right? And which I believe this crowd is. So using data from Robinhood, we find that Robinhood investor engage in more attention-induced trading than other retail investors, right? Because it's very easy. One of the reasons is very easy. And also those apps will drive your attention by some of those ferries. Now that actually they have taken those out, but will ask you to take action more and more. So Robinhood users are unusually active. In first quarter 2020, they traded 9 times as many as other retail investors from other brokerage firms. Right? But eventually, I don't know whether there was some statistics around whether they made money or not. I have not read the full report. I don't think I will have a time to read the full report, but there's some stats around. On an average, the loss was on 8% or 9%. Gosh, I thought I had highlighted that, or maybe not. But it's an interesting report if you really want to look at or interested in okay. I didn't highlight this. Yeah. Consistent with models of attention-induced trading, intense buying by Robinhood user forecast negative returns. Average 20-day abnormal returns are negative 4.7% for the top stocks purchased each day. Again, 20 days doesn't mean anything. But this is not just one study. Or over long term, the impulsive trading really doesn't work out. So again, how to avoid this? Don't look at a portfolio because we don't need cash from it. Or even if we're looking at it, don't get disturbed because it's a small position. Any individual stock is a small position for my overall portfolio. We're still okay. Or third thing is, hey, I can always reduce my cost basis and cushion the loss from what's happening in the market, rather than taking any drastic action based on what's happened in last 24 hours. That's something which we should avoid. And in the same line, as a long-term investors, it is vital to avoid chest pumping on fun green days. I don't know, this week was good, next week could completely turn around, as it is to remain calm and disciplined on deep red days. So we all need to move into our zone or our own Zen like state when we are looking at investments, and not really trying to find out fun, or reading about investing, reading about companies can be fun, but actual actions, getting more excitement and getting more sugar rush is not good from a return perspective overall portfolio. Maybe some small portion of a portfolio could be that for sugar rush, but that's fine. We need that. Time to time, we need that. Otherwise it become completely boring. So yeah, maybe have 5-10% of stocks in your portfolio that gives you that sugar rush. Nothing that could be okay, but not 100%. Right? You know what I mean. And this is again interesting one. Two of the most important exponentials of the coming decade: percentage time spent in digital world. Probably because talking about next decade is not for me, but for the next generations, and percent of wealth stored in digital assets. Call what you may want to call it: crypto, call it Web3, call it metaverse, call it online gaming, or Facebook, or Meta. But the macro trend is clear. All we need to now focus on is ride this macro trend. We've been talking about this macro trend for almost more than 2 years. I've been focused on this for more years than 2. But yeah, some point of a time, these foundations that are now being built will become a reality. Solutions will be built, but we can't ignore these big trends. Just as we couldn't ignore e-commerce, we couldn't ignore mobile payments. It might have sounded really completely different, out of this world when it actually started, but the trends are clear. All right, any thoughts? All right, continuing on, another interesting series of tweets around decoy pricing, something to learn. And this was, then I realized when I went through these tweets that, really dig deeper, and then we've all been, I wouldn't say victim, but we all have been, marketers have used all of us in something called a decoy pricing, using us something called decoy pricing, right? So let's go through this. And next time when you're going to buy something, just be aware, probably will be a little more informed after this. So this decoy pricing is something in which a product is priced just for the heck of pricing. The company doesn't want you to buy that product. That is why it is called a decoy pricing, right? There are 2 products which company may want to sell, but they'll insert the third one they don't want to sell, but they don't want you to buy that product, but it's a decoy for altering our behavior towards the more profitable products. So that's an interesting. So companies like AMC, Starbucks, economists use psychology to maximize profit, right? The human mind is exceptional at comparing two items, but the presence of a third option causes a short circuit in our minds. Right? And with the third option present, the mind begins comparing options against one another, and this shifts the focus from fulfilling needs to finding the best value. Anyone knows the best example of it? And we all have seen this. Don't tell me that you were able to guard yourself against this decoy pricing tactic. I won't believe. Yeah. I know an example, and I myself have done the same thing. Okay, so let's look at this. Companies include decoy options to highlight the value of their targets, usually highest margin options. It means they will want to force our behavior to buy the product which is highest margin. Whether I want it or I would have wanted it or not. If there was no actual decoy, I probably wouldn't have taken that. So how does a decoy work? Right? See, we all have been victim for this. Movie theater popcorn is a very classic example. The large size is the target option. They all want us to buy this. It is the most expensive and the highest margin. But without the medium one, the moviegoers are making a decision based on how much they want to eat. An individual, I might just want to pick up the small one because large is too big for me. But you add a decoy, and suddenly now I'm seeing that with 50 cents more, or let's read through it, right? Without the medium, moviegoers are making a decision based on how much they want to eat, but they add this decoy, which is a medium size. And what we start doing, everything changes. Logically, a large should cost $9 based on $2.50 increase from the small to medium, right? $2.50 here, increase $2.50. The large should cost me $9. But with only 50 cents increase, now suddenly this becomes what do you call a value stock or a value purchase. Now the mind is now gone bonkers. Instead of thinking how much I wanted to eat, I'm now thinking this is a value stuff. I'm gaining a lot of value if I buy the large one. I end up buying large. I have been victim of this. I've done this many times. Is just based on saying, hey, if I just pay 50 cents more, I can get double of this. Right? Economists also applied something similar. It was the most egregious decoy ever and still worked like a charm, which we won't think that it would work because it's so ridiculous. So these were the subscriptions. Right? Economist.com subscription, $59, 1-year subscription, which gives you online access. Print subscription is $125. Now, print and web, including both, is $125, 1-year subscription to the print as well as online access. So you got a online only $59, print only $125, print and web is $125. So the goal was to drive the sign up for very profitable, ultra profitable print and web. Right? But if they didn't have this print subscription, no one would, the jump from $59 to $125 is too big. It's more than double. So you need a decoy. And this particular price subscription serves as a decoy. They wouldn't want to actually sell this one. So the decoy seemed so obvious that it couldn't work, but it did. So they actually ran this with 100 MIT students, business students. So when they had web only and web and print 68 students signed up for web only, because too big a difference. And 32 signed up for web and print. But when they added a decoy, which is this 125, a decoy pricing, obviously no one will sign up for the decoy. But look at the behavior that has changed. Everyone, 84% actually signed up for the higher pricing than as compared to 32% that they were doing earlier. Because now suddenly the way we start to evaluate these options have changed. This is the science of biology. So there's actually a book. I read it many years, at least I think 5-7 years ago. The book is called Biology, Buyology. It talks about not just this, but a lot of other techniques and the tactics that the companies use to change our behavior or change our decisions that we take when trying to buy something. It's a very fascinating book. May want to read it, and just be conscious of when you're watching any advertisement or any offers. You'll be a little more particular about why are they promoting this particular offer. Whether I'm gonna next time I go to AMC, whether I'll buy the small one, I don't know. I might still end up buying the large one, but now at least I'm clear that this is where AMC wants me to spend my dollars on. All because they inserted this decoy. It just doesn't make sense to buy this medium when with the 50 cents more, you can get this big one, which is almost the double. Same is the case here. You'll foolish if you just buy this print subscription, because you can get web free with the same rate. And that's exactly the behavior that they wanted to drive, and worked beautifully. So yeah, interesting stuff. Thought I'll share. So that was a good book. If you get your hand on, it's called Biology. Very cool. Correctly. Let's just search. I think Uyology book. Yes. Truth and Lies About Why We Buy. It's a fascinating book. Certain says, buying a phone or car, good, we have only two choices, Android and iOS. If we choose Android, then again there's a nightmare. Now even on iOS, there is a nightmare, Sachin, or it's going to be, because now Apple has come up with those SE phones, right? We talked about last week, now to compete with Android. So we are spoiled for choices, especially the developed countries. But these are, these tactics are amazing. And it's all about shifting our mindset and shifting our behavior. That was one interesting tweet. It reminded me of the book that I read many years ago. Other one is America's default, silent default. Right? We've been talking about Russia might default. Actually, Russia did not default. That was one thing which was in the minds of investors across the world, that Russia might default on its debt obligations. But America has already defaulted. I mean, default is basically reneging on your promise. You promised something you didn't fulfill. But we have done it not once, we have done it multiple times. Right? The first one was going back to the history of dollars, where we told the rest of the world in 1944 or somewhere in 1940s, I think after the World War II, right? So it will be after 1945. In the Bretton Woods Agreement, we told the rest of the world that you trade in dollars, and you can, at any point of a time, you can exchange the dollars for gold at a price of $35 per ounce of gold. right? Rather than trying to trade in multiple currencies across the world, because we were superpower, we told the rest of the world, have faith on us, have faith on US government. Let's trade only in dollars, and we'll make sure dollars are backed by the gold. But we broke that promise in 1971 because we have to print a lot of more dollars, but you can't find gold at the same pace. So if you're printing a lot more dollars, and when we have agreed to the world that each dollar will be backed by 1/35 ounce of gold, that was no longer a case. So we broke our promise to the world. And Richard Nixon took the dollar off the gold peg. We will no longer be providing you gold if you're holding dollars. So we moved to petrodollars. And how do we make sure that the rest of the world still trade in dollars? We move to petrodollars, right? Now with the coming of petrodollars, where the concept was to use that the countries will sell oil only in dollars, and in return, US will give them protection. So everyone needed oil. So dollars, and countries like Saudi Arabia, they will sell it only in dollars. So every other country who wants to buy oil would need dollars. So they would buy US treasuries. And that became the de facto saving instrument for the rest of the central banks. But now we did a default number 2. All the treasuries, which is basically debt that US owns to other banks, we defaulted that. We seized those treasuries, said we're not going to give you money back, right? This we did with the Afghan central bank. And now, as a part of imposing sanctions on Russia, we told Russia, forget about the US treasuries that you hold. Sitting today, we might think it was the right stuff to do. It's a righteous thing, but it does dent the whole credibility of dollars. It doesn't put a dent on the faith of what the US government could do, because it's a default number 2. I mean, now it's like we promised them that if you're holding US treasury, we'll be able to get dollars anytime when you want, because that's a debt, and the US is indebted to those for the debt. Now we are refusing to pay that, irrespective of whatever the situation is. Today it is Russia, tomorrow it could be any other country. So essentially the signal that we sent to the rest of the world is, if you're not in line with us, with the values that US promote, and it's debatable. Some countries might say, no, that's not the right thing to do. But whatever it is the case, we have weaponized our dollar. So world can no longer depend on US to honor its promise. We have broken it twice already. The freezing of the foreign exchange reserves, what we did with Russia, is a financial weapons of mass destruction. Right? So every other country must now diversify out of dollar as a matter of national security. And we saw this quick change. It didn't take us a week. Right? The rest of the countries are not stupid. Today, America is your friend. Tomorrow, the tables could turn. As a country, I don't want to be in a situation wherein America can turn off my lifeline by seizing the reserves or not honoring its commitment around their obligations of the debt. That's what we did. We did with Afghan government when we seized the reserves of Afghan central bank, saying we want to use that money to pay it for to the victims of 9/11. And more recently, we did the same for Russia based on what's happening on the Ukraine. We can debate all the while saying it is the right thing to do. Short term, yes. Long term, we have dented our credibility. And so world might look into now something else. Maybe a basket of currencies. US dollar may not, I mean, we have broken our own back by these actions. So we should be ready for de-dollarization of world economy. It's an eye-opener for the rest of the world. We can do with Russia, which is, it's a big superpower, right? Militarily also. If US can do this with Russia, other countries, it's easy for us to do with any other countries. That's a signal that we have sent. These actions were also debated in 2014 or 15, whenever Russia had invaded Crimea, but we decided not to go to this extent. But this week, or at least in 2021, we basically crossed that line. So result is for all of us to see. World order has shifted. Saudi Arabia is now saying, I'll accept yuan instead of dollars. And this is this week's news. Now they're actually talking to Beijing to price some of its oil sales to China in yuan. This is the first time since 1970s when we basically told Saudi to sell oil only in dollars and we will give them a protection. It's the first time since then they've actually now deciding to trade in yuan with China. China buys more than 25% of the oil that Saudi Arabia exports. If those are started to price yuan, those will boost the standing of Chinese currency. Right? It is a profound shift for Saudi Arabia to price their, the oil in anything other than dollars. Forget yuan, anything other than dollars. The majority of the global sales, around 80%, is done in dollars. And the Saudis have traded in dollar exclusively since 1974. But now, based on what we are doing, what we have done recently, countries are trying to diversify from the impact of dollar. Right? Same thing for China. US dollar has become a hazard, highlighted by the sanctions on Iran and sanctions on Russia. Today is Russia, tomorrow it could be China. Or it could be any other country. That's the signal that we are sending. So the writing is on the wall. Will yuan becomes the next world currency? Probably not. In between, for a few years, we thought euro could become the next world reserve currency. It did not, because Saudis, they were still selling oils in dollars. They were still our friends. But over the past few years, our relationship with that government is also not done great. And now they're not even talking to us. I don't know how much you look at the news, but recently, Prime Minister of UK, he went to meet the Prince of Saudi and the King of Saudi to talk on behalf of US, because Saudis have refused to take calls with President Biden. So Prime Minister Boris Johnson went there as an emissary of the West. What a mockery situation we put ourselves in. They refused to talk to us. Biden administration have been trying to set up a calls between President Biden and Saudi prince, but they're not taking any calls. So we had to go other way around and have Boris Johnson go there and talk on our behalf. So, and this is, I would say these actions that we have taken is probably what do you call as a last straw on the camel. Probably, I don't think that probably is a too harsh a word, but we are giving the signals to the world, saying if you are too dependent on dollars, you are sitting under our thumb. So over past few years, we've already seen that the amount of reserves that central banks across the world hold US Treasury has been going down. China now holds fewer US Treasuries than what it used to hold 15 years ago. So that's why most of them is being bought by our own central bank. Right? Our balance sheet is now what, $9 trillion, because the rest of the world is not buying our debt. So it's kind of a snake eating its tail. And the share of the dollar denominated trade has been decreasing as well. Overall, from a global trade, almost 80% used to be priced in US dollars. Now that has come down to 60%. We'll see which currency will succeed. There's also conspiracy theory that Iraq had tried, they wanted to sell the oil in euro, denominated in euro. Now, who knows what the reality was, but there are always theories around it. But this is a very important development from the shifting of the world order. India and China, they're already doing a business in or buying and selling oil in non-dollar. I think India and Iran, China and Russia, they are doing business non-dollar denominated. So now the country that has been our friend for 40 years is now very keenly looking into it. I mean, there have been talks on and off for last 6 years. But this week, it is now kind of a moving towards, yes, let's do it. So we'll see. But time to get ready for, a different kind of a world, which is in some cases referred as Bretton Woods 3. So Bretton Woods 1 was US dollar pegged to gold. Bretton Woods 2 was a petrodollars. Third one, I don't know. But I'm hopeful maybe it could be a non-sovereign control, which we all know is there is only one right now. And that's what, again, makes me bullish on the crypto economy. But things are changing. Things are changing. Sam says, righteous, what the US government does is a global God-given truth. Yeah, that's what we want to feel, right? We are militarily strong and have been able to enforce what we see as right. But I don't know how long can we continue to do this. What is the probability of going back to gold-backed currency? And now, to me, it looks like, I don't know whether it's a gold-backed, but to me, it looks like probability is higher to go to a currency which cannot be inflated away by any single sovereign country. Could it be gold backed? Could it be anything else backed? Could it be Bitcoin backed? That's a different thing. Because even when you talk about gold backed, that's a resource which is also dependent on the countries, right? Gold has to be mined. Now, depending on where the most of the gold is, the supply of that asset could also be controlled by some sovereign government. Again, these changes will take decades to appear. We may not see the changes happening, next 1 year or 2 years. But these small things does give a signal that things are changing. So Sachin, yeah, and if I think it was 4 or 5 sessions ago where we looked at the gold, and there was one big purchase on the London Metal Exchange, and I think the author was suspecting that it is from some sovereign government. And then I also saw another news that Russia bought a lot of gold. So central banks are to understand and now trying to reduce their dependency on US dollars. That is one thing is very clear. Right now they are moving into gold, but anything that cannot be controlled by a single sovereign party is where we may go there as a world. Or the other option could be a basket of currencies. So the impact of any one currency, impact of any one action from any one federal bank could be minimized. Right? That is what was proposed in the original Bretton Woods in 1940s, but that proposal was shot down by US representatives. And we said, no, stay on gold. But yeah, these are three options. Maybe gold, maybe a crypto, or a basket of currencies. I don't think world is going to move to yuan anytime sooner, because I don't think world would have a faith on Chinese government. Euro has already been in trouble. They don't know what's happening in their own backyard. They have to clean up their own side. So I don't think euro will become a viable girl as a viable option as a world currency. So it could be either the basket or crypto or the gold, and no one knows what will happen, and the things will also change very slowly. That's my thought. So that is why I said all this crypto stuff is a generational change stuff. It's not going to happen in next 1 year. Something about I think, Sam, you said that is the person who talks about different companies, and do your own research is important. Even full-time analysts could be wrong, because JP Morgan gave price target of 65 to Alibaba, right? And again, most of these analysts I see, they all just follow the stocks. Very few are the ones who will just stick to their conviction based on business. Most of them will say if Alibaba went down, they'll downgrade it. If it has gone up, they'll upgrade it. And somewhere, yeah, there's a report that JP Morgan came out with on 14 March saying Alibaba is worth $65. And I won't be surprised if Baba stays higher or goes higher, they'll flip. Have seen that time and again. So it's important to do your own research, guys. That's why it is important. That's why I want to spend time in looking at the companies. We're going to look at one company today. And then we can frame our opinion irrespective of whatever is being debated on Twitter or on stock tweets or on tip ranks or on JP Morgan analyst report. That's all are pieces of information that we may choose to use it or not. But those shouldn't be the decision-making points. Another quick one around the record buybacks from S&P 500 companies. So 2021 looks like was a record time for companies to return money to shareholders. 300 overall in 2021, 410 companies out of 500. I think S&P 500 got 505 companies, not exactly 500, but 410 companies, they reported buybacks of at least 5 million. It remained top heavy, with top 20 companies accounting for 52%. Of course, we recently heard Amazon declaring $10 billion of buybacks. Google had done it. Apple continues to do it. Microsoft does it. So 2021 overall buybacks were 881 billion, right? Almost $1 trillion, which is 70% increase from 2020. 70% higher. So even if the company's business doesn't do that good, they've already reduced the share count by this amount to bring up the EPS numbers, right? Earnings per share. So buybacks are also expected to continue at higher level for Q1 2022. Right? So essentially, this will lift their EPS. So there are few ways, and these buybacks or the dividends are the, I would say, ways of the decisions around the capital allocation that a company's CFOs have to take. What to do if you have a, generating profits? One, invest in business. You could buy back, or you can buy some companies to grow your business, or do some capital expenditure to grow your business. If you don't see much of a growth prospects on the business, recession may be coming. Consumer sentiment is not great. Maybe companies are valuations were super high in 2021. Some of those which you want to acquire don't want to acquire. What to do? Okay, return the capital to shareholder. Buy back some of your shares. Or other way to return the capital to shareholder is pay dividends. So we talked about those dividend companies which have been increasing their dividends for 25 years. And 2021, we also saw record dividend returns. So $511 billion returned to shareholders as a portion of the dividends. So total shareholder returns, which include your dividends plus buybacks, was 1.53 trillion in 2021. So even if company's business has not increased, the overall return to shareholder per share has anyway increased just because of these shareholder friendly actions. Right? So buybacks and dividends are generally called shareholder friendly actions because they are good for shareholders. The one increases the price of per share, the other one reduces the cost basis, right? Increase the price or reduce the cost of holding the shares. Both are good for shareholders. And 2021, this is buybacks are expected to set a new record because companies have maintained their buybacks. So we'll see. So that's why I'm not selling shares of good companies. It's not a good time to sell shares of any good companies. If nothing else, some buybacks and dividends will pave the way. From based on the holdings that Berkshire Hathaway has for Apples, just sit and earn billions of dollars in dividends and buybacks itself. So that was an interesting note, interesting statistics around the company's actions. Lastly, around the V-shaped recovery in Chinese stocks. If you were holding Chinese stocks in your portfolio, it's been an amazing week. I mean, we don't see these big, at least I've not seen these huge changes on a daily basis on companies like Alibaba. It's the first time that I witnessed. They all surged on Wednesday. Alibaba was up 36%. 36% on Wednesday. It closed around $73, which was a new 52-week low, and went all the way up on Wednesday, more than $100. So what changed? China came in support for the stocks. So last week we talked about, and this is what, right? It's always a surprise. So last week we looked at how the Chinese stocks were getting squished between Chinese regulators and what SEC is doing. And then one change in narrative flipped everything. So China on Wednesday came and told, yeah, we will support our stocks. They told regulators are progressing towards a cooperation plan on US listed Chinese stocks. Right? The vice premier of China came and talked about Chinese government, will support the listing of stocks overseas. And the crackdown on the tech companies will end soon. So within a week, situation is completely reversed. And it came from the highest level of government, one level below below Xi, came from a vice premier, and market loved it. Sorry for those who were holding it and sold their holdings, saying it's really bad. We never know what could happen. And I still don't know. I mean, there is still a risk on Chinese stock, which is a sovereign risk, which we can never ignore, because these companies are so much dependent on the government that one announcement, nothing has changed on the ground yet. It's just an announcement came. One announcement could result in 40-50% jump in company stock price. So this is Alibaba. It closed at 73.28, and eventually Friday closed at 108. Right? It's almost 50% jump on the positive narrative from Chinese government. It could head other way around also. So there is always a sovereign risk. But look at the huge amount of shares that got traded over last 2-3 days. That's Baba. This is JD.com. Okay, by the way, I hold some positions in Baba. Should make it clear. JD.com from 40 all the way to 65, like 41 to 65, up almost 50%. I have no positions in JD. I actually sold off at 66 because it's too small. My only thing was either I want to make it a bigger position or just get rid of it. So I sold it off prior to this fall itself. Just was a cleaning up my portfolio. Yes, that's something I want to share. In our next portfolio pizza, I'll have less than 100 shares because I'm kind of trying to reduce and get the dust out of my portfolio. So JD was one of them. On a too small a position, let's sell it. Otherwise, I had no other opinion. It was just a little bit of cleaning up my portfolio. Tencent I hold in my portfolio, 37 to 51. All the Chinese stocks. NIO yesterday went up another 11%. Another one, NIO is EV, another competitor, EV, Zeng Auto, from close to $17, $18 all the way to 29. So huge jumps in all the Chinese stocks, right? So now is it great? Look at DD. DD is like almost double, more than double, from $1.7 to now $4, more than 100% up. So is it over? Is it now deep value some of these stocks? Because it looks like the fear is gone. Chinese government will support this. They're may roll back the regulations on the tech companies. Is it time to get in? I don't know, depending on individual stocks. Some stocks I'm bullish about, but with an overarching risk that it is still dependent on government. Does DD look a good buy? It's down from $14, $15. That was, just after IPO. They IPO'd at $14, if I recall correctly. Now it's down to $4. Yeah.
DD is definitely going to be delisted. So what's up? I don't understand that.
No, I'm going to talk about that. So all I'm saying is anyone tempted to buy DD? Because of now maybe the tables have turned. Is it a deep value or is it a falling knife? So do your own study. So here are some points on DD, right? Before you go and say, oh, now DD is so cheap, it is at $4. It used to be $10 or $14. DD's app are still suspended in China. So there's no growth. If you recall, the Chinese security review, after the Chinese government did a security review of their apps, they asked them not to have the apps in on those Chinese app stores. So they had to remove their apps because of security concerns. So there is almost no growth. Users, those who have apps will continue to hold it, but you can't download DD apps from Chinese app stores anymore. They have a costly overseas expansion. So they've been trying to grow overseas. Last year, the revenue rose up 57%. Revenue was 400 million, but the loss was 618 million. So be aware of that. They have to now continue to take losses in Russia, while other companies have gotten out of Russia. Like Uber, they already left Russia last December. They sold their stake to Yandex. Didi wanted to sell their losses in Russia and Kazakhstan, or they wanted to get out of their assets there because it's loss making, but now they can't because the Chinese government won't like it. Chinese government is opposing the sanctions that were levied against Russia. It's a US-led sanctions. It's a NATO, not US. It's a NATO-led sanctions, largely implemented by US because we control SWIFT. But China didn't like it. So now, if Didi pulls out of China, out of Russia, that will go against what Beijing wants to signal. So, and because it is so heavily dependent on government, it is stuck in China, even though they are losing a lot of money in China. They already told they want to get out of, sorry, not China. They want to get out of Russia. They already told in February that they want to get out of Russia, but now they can't. Because that will be seen as an antagonistic move against what Chinese government is signaling to Russia. So they can get out of. Chinese regulations have added more burden. Probably this might come down now. What we will see right now, it's only the talks that Vice Premier had done. But recently, the new guidelines that you have to give better wages, you have to give their time usage of the personal data, you have to pay them better, give them benefits. These all will increase their losses, operating losses for Didi. Right? Macro headwinds around the gas prices. Be aware of that. And recently, we also had a COVID resurgence. I should have actually talked about that. China's got a zero COVID policy. So in the province of Shenzhen, there is 18 million people lives in Shenzhen. And Shenzhen is basically factory for Silicon Valley. Right? Foxconn has got their factories there. So many of these high-tech gadgets that US uses are built in Shenzhen. It's an 18 million residents there. There were 19 cases were identified. 19 of COVID cases were identified, and now the Chinese government has put Shenzhen under lockdown. So, of course, that's 19 were a week ago. Probably the cases would have multiplied by now. I don't have the latest. I didn't look at the numbers in the last 2-3 days. But the COVID resurgence is happening. In Hong Kong, the number of COVID cases have gone up. But China has got such a strict zero COVID tolerance policy that they will shut down the subway, they'll shut down the markets. I mean, again, it came back to the kind of a COVID era wherein only one person from each household is allowed to go out to fetch provisions and groceries once in 2 days right now. So there are a few cities that are now operating under lockdown in China. That won't turn out good for Didi, right? Delisting from NYSE. I mean, it's an embarrassing situation for Didi right now. Because last December, they told they will delist because Chinese government didn't like it. And they told we will do a listing in Hong Kong. But earlier this month, they told they won't get listed in Hong Kong because the Cyberspace Administration told that their data security measure was still inadequate. So, and the apps will remain suspended. So now the listing criteria to get listed in Hong Kong is stricter than maybe NYSE has. So Didi told that they are rolling back their plans. They don't plan to list on Hong Kong exchange. And they already announced their plan to delist from a New York exchange. So I don't know what they're going to do. Right? Maybe they just trade in over-the-counter exchange, OTCs, because they will neither be in NYSE nor they can list on Hong Kong. So it's a tough situation again. And similarly, you have to look at each company and see what their business is, because many of these companies look at a deep value, right? Because the Chinese tech companies have been beaten up heavily over the last 1 year. Alibaba's highest was 310. Right? This is 52-week high, but prior to that, 310 was its highest. From 310 to $73, which means is down more than 75% from its all-time high. Great. I mean, such a deep, sounds to be a deep value. Same is the case with all others. Tencent, Neo was up $60 sometimes, 55, down to close to 15. But we got to do our own analysis around each of the companies. Samuel says only 2,000 cases in China. Yeah. But the Chinese government is really strict. Their COVID, the zero COVID policy is really strict. They shut down everything. We had seen it earlier also, right? When, which port? I forgot the name of the port. But there were COVID cases discovered in the port city, Hanyang port, somewhere, and they shut down the whole port. And we started having trouble here because the whole supply chain got disrupted. So, but yeah, Chinese government is really very strict in terms of tackling COVID. So be careful if you are tempted on any of these Chinese stocks. Number one, look at the business side. Number two, be aware that it is still heavily dependent on the blessings of Chinese government. That's a risk which no one can put any number to it. I don't care whether it's a Warren Buffett, whether it's analysts from Wall Street, or whether it's a retail individual investors like us. I don't think anyone of us know and can really price in the sovereign risk on these stocks. So, but some stocks were really looking very cheap from a traditional valuation perspective. But no one can put up, like I said, it's impossible to price the sovereign risk. All right. Anyone holding Chinese stocks? No one? Very localized portfolio? Only in US?
I only have Naspers, which is South African
Oh,
stock.
Nasper. Nasper has done great. I mean, one of their best investment, Nasper have. They're the biggest holders of Tencent, if I recall. So that's good. Yeah, Nasper is South African. And I think this is the one company which is not known, but had an investment on Tencent, which turned out to be a bonanza, just like Alibaba's investment turned out to be for Yahoo. Okay. Asif says, yes, Baba Tencent. Okay. I should tell my Chinese holdings. I hold Baba. JD, I don't hold anymore. I hold Baba, Neo, what do you call Zhang Motors, XPEV, just from diversification, and Tencent and ETF. Those are my on the Chinese side. But again, the position sizing is important. Those are not constitute the majority of my portfolio. NTES, NetEase, Baba, Baidu, PDD. Oh, I hold Baidu as well. Okay. The sitting in my retirement account, I don't look at that, so it's kind of a went off from my mind. Archana says Coupang from South Korea. Yeah, it's a e-commerce delivery, but it will test the patience for many, many years. I hold Coupang as well. But they are still trying to build their infrastructure on, and setting up e-commerce infrastructure is not easy, especially in a densely populated country like South Korea, where they do not have, all the FedEx and the network for FedEx network for delivery network is not as robust as what we have in US. So yeah, I hold Coupang, want to hold it minimum for 10 years before it could start delivering some results. So we'll test a lot of patience. PDD, Pinduoduo, I don't hold any of that. Samuel says all Hong Kong shares except DD. So it is always, again, I would also want to have positions outside US, just from diversification perspective. So I'll hold, by the way, my biggest position is not even a US company. You all know, I've spoken about multiple times. It's in a Latin America company. And, but yeah, I would want to hold some, if not individual companies, maybe hold some ETFs to diversify outside of US. Nowadays, there are many country-specific ETFs which are available, right? Or there are ETFs which include a lot of multiple countries, like emerging market ETF, which include EEM. EEM is emerging market ETF, which include all the emerging market companies like India, Russia, China, Brazil, and other emerging markets. There are country-specific ETFs. We want to diversify from outside of US. EWZ, it has Brazil. There is another one for Mexico. Forgot which one was that. There are INDA for India, FXI for China. RSX, that was for Russia. It has right now, it's not even trading because of the restrictions that have been put forth. So Sam says, Baba, CSIQ, I don't know. Do you I'm aware of. Some of these companies, sorry, I have not heard those names, Sam. Yeah, it's always, again, Xiaomi. Again, US markets have done great for the past many years as compared to emerging markets, but who knows when anything could happen. So I always want to have some portion outside US as well. Cool. Well, that brings us to the last, or maybe second last section, or maybe the last one, doing a company review. Okay, those who had joined when I was talking about the company, please don't answer this. For others who joined a little late, which company is this? Which company do you think I'm going to talk about? I actually gave up the name of a company during the initial warm-up sessions. I did not want to, but there was some question and I forgot about it. Any idea which company are we going to review today? Let's take some wild guesses. Come on, don't be shy. There are no penalties for wrong guesses. Still thinking? I've one or two guesses. What do you think this is? Okay, this is not the logo of the company. Let me put it that way. If you're trying to figure out which company has this logo, this is not the logo of company. FB, nope. But this has kind of a connection to the company that I'm going to talk about. Let me bring up that. Maybe metal related. Nope, just shows how ambiguous the logo is. Marbles. Is Marbles a company? All right. So let me sip some more coconut water, and we'll take another half an hour. So as always, we'll probably run and finish by 12:30, maybe half an hour for this and some Q&A. All right. So the company that want to review, and I want to thank Sam for pinging me on Twitter saying, hey, can we talk about this company? And I realized that I haven't spoken about this company, even though I hold a very small position in it. We kind of have discussed this on and off, but never did a deep dive in order to understand this business. So the company I'm going to talk about is Palantir. Now you might be wondering what Palantir had to do with that marble, right? Or the crystal ball. We'll come to that. There's a history behind it. Any Palantir shareholders? I hold a very small position, a starter position in Palantir, like less than 0.5%. So kind of you can just ignore it, right? It's a dust position just to dip my toe. Any other Palantir shareholders? No. Anyone who has not heard about this company? Okay. No one? Okay, new to me. Okay, so Rob says he's not heard. SP says hold some options. Okay, so hopefully I learned yesterday night and today morning something more about this company than what I had read about it earlier. Is Palantir profitable? Hell no. They are not profitable at all. Well, who talks about profitability for the high growth stock companies? No, I'm kidding, right? I know right now people have started to look about so-called profitability, but no, it is not profitable. We will look at it financials. Yeah. So the company in focus for today is Palantir Technologies. And so let's dive right into it. I run through this for every stock where I want to initiate bigger positions. So right now, look at a company history. What is Palantir? We build software platforms for large institutions whose work is essentially the way of our life. So essentially, this is a software company which build softwares for large institutions. Now, this company have been involved in some controversies, not controversy, but their clientele that this company has is not what everyone, some people have reservation about the type of a clients or customers that this company has. This was founded in 2003. So it's not a new company. It's almost 18 years old. These were the founders. A couple of founders came from PayPal. So PayPal Mafia, PayPal Gang, whatever you may want to call. But Peter Thiel is a pretty well-known investor, VC, company founder in Silicon Valley. He was one of the original founders of PayPal. Then he was an early investor in Facebook. Peter Thiel has got its own VC fund called Founders Fund, and he invests in a lot of tech companies. And so he is also founder of Palantir. It started in Silicon Valley. Like many of the companies, the high-tech companies that we know, they start in Silicon Valley, but then relocated to Denver, Colorado. And there's also story behind it, because if you look into this company, this is a little quirky company, little different type of a company. They don't, follow the same ethos of the Silicon Valley company, right? And actually, in the S1 itself, the CEO Alice Karp has put a statement around Yeah, Silicon Valley produces great engineers. They got a good tech, but they shouldn't dictate how the people should live their lives and all that stuff. So they don't embrace the values of a Silicon Valley company, so they moved out of Silicon Valley. Second thing is, yeah, they also save some cost. They started by building the software for intelligence community. Right? This is where a lot of people don't like this company, because their software was used mainly by CIAs, FBIs of the world. Their initial funding actually came also from CIA. Apart from Peter Thiel, CIA also kind of helped this company to grow. But with CIA, then a lot of those three-letter agencies, FBIs, NSAs of USA and the allies of USA, they started using the Palantir built software focused only for them, to help them in counterterrorism investigations and operations. Lately, for a few years ago, they started working with the commercial enterprises, right? Not just the governments, but also with the other commercial companies. And depending on what kind of an investor you are, you may want to focus on whether the government, they are making more from government, or are they making more for commercial, right? Now we're all wondering, right, what's the story behind this? What is this? So this is where the origin of their name came from, which is a Palantir is one of the several indestructible crystal ball from the Lord of the Rings. So this is actually a Palantir. This is a crystal ball made famous in the movie of Lord of the Rings, which is called Seeing Stones. These balls were used for communication and to see events in other part of the world. So that's the connection. And that is why they named this company as Palantir, because it allows their customers to predict and see the events based on the analysis of the data, right? Seeing stones. So that's a story behind its name, and that's where this marble or the crystal ball is related to this company. All right, let's move on. So this is Palantir. So initially, they even struggled to find investors. Right? If you tell them that I'm working with, focused only on these companies like CIAs, etc., or ICE, there have been shift in the change, the shift in how the funds would want to view these companies and invest in these companies. So Sequoia Capital doodled through entire meeting. Cleaner Parkins lectured them, saying about their failure of their company. Only early investments were $2 million from CIA venture capital arm, QTEL. And then 30 million came from Thiel himself. That's how they were not funded by traditional investors, because nobody wanted to get their name associated with the company that is focused on working with those secretive government agencies. May not want to get associated. So from an industry perspective, again, I'll quickly run through this because this is more of a general marketing talk coming from their S1 in terms of why the industry. So in the end, all they're trying to say is the commoditized softwares, right? The software that you can buy off the shelf. That will do to keep you alive in the market, but not thrive. If you really want to thrive in the market, if the companies really want to move ahead, do better than their competitors, they need to have something which is specifically done for them, right? It is off the shelf, but then easy for them to, customize it. Not having built everything from scratch. Today, many of the companies, because the off-the-shelf won't work, they will basically hire consultants, IT services companies. We have a big government consultants, contractors, Booz Allen Hamilton, Randstad, they all work for these government contractors in trying to build the solutions for them. So say the world is moving towards buy and then customize it. And of course, embrace complexity or resist it. Self-explanatory. So what Palantir does is basically their software enables the customer to transform massive amount of information into knowledge that reflects their data, their world. The difference is the data is represented not as a spreadsheet or a tables. And now I'm getting a little more into tech side because this is a technology company. Right? But those are expressed in entities, events, consequences, decisions. You are able to relate with your day-to-day work and with your organizations. And we'll look a little more into this. It doesn't displace existing system. It works with the existing system. And of course, security is always their first priority because right from their get-go, the origin of this company is to work in a highly secure environment, working with the intelligence agencies. Right? So it stems from there. Right? Market opportunity is they define the market opportunity to be around $119 billion. What I liked about when I read about this is not many companies actually go into the depth of defining how they arrived at this market opportunity. But Palantir has done a better job than many other companies that I've analyzed. So commercial side around 56 billion, government side is around 63 billion. Right? Then there are more details around it, but I really like that they have not just thrown in a number, but have done provided us with little more information on how they arrived at these numbers. So decent market opportunity, it's like $119 billion. 2021, they did $1.5 billion in revenue. So still huge runway available ahead of them. Right. I see a comment here. SP says, hyped up company. So it is a lot talked about company, that is for sure, because it operates in a sector which is always debatable, right? Because their customers are like such. So wherein many companies would refuse to work with, let's say ICE, because they use these tools to track immigrants, those who have overstayed, and then do whatever legally what they want to do. Not many companies want to work with those, right? I think Google, was it Google or Amazon? Employees actually staged a walkout when the companies, when it was, I think maybe Google, when they were selling their software to ICE. Palantir does it. So it is, their customers are in the government side are controversial to say the least. So it will always will be in a news for one or the other reason. All right, then, but on the commercial side, and this is which is more exciting for me, right, is that they started their journey as with working only with government, but now they started to expand that into commercial side. Right? At the end of the day, their software helps to make sense of the enormous amount of data that, let's say, CIA generates. Right? Their software is used in the war fronts and trying to. If you go to their website, there's a huge, a big use case explained in terms of how various portions of the software could be used. Again, that's a notional example, maybe true. It could be used in terms of trying to track down terrorists hidden in the Tora Bora Mountains, right? Where you have to have so many decision points and make a decision on that. But the similar case they started to look at is if you can help government make sense out of data, the rest of the industry also have the same problem. We have tons of data. That's why we have so many companies in the data analytics space. Snowflake, Databricks, which is private. Snowflake is public. Right? Teradatas of the world, Oracles of the world. And data is of different types. It's not just tables and rows. Data could be your geolocations. Data could be your satellite images. So then they started looking at maybe, we are expert in making sense of data, trying to find a needle in the multiple haystacks. This could also be used in a normal commercial companies. So they started moving into commercial segment. Right. So first one they got was into banks. So JP Morgan started to use them to figure out based on the actions, trading actions that have been taken. And in 2009, we did have that some whale, JP Morgan whale, of a rogue trader. So JP Morgan started using them to figure out if a trader or an employee actually could go rogue, right? And then, so these black dots that you see are all government. The blue ones are the commercials, right? So then we saw they started moving more into the commercial segments as time moved along. Okay. So what products do they have? So they have two types of products. One is focused towards the commercial segment. Other one is focused towards the government segment. So one product called Foundry is focused towards the commercial segment, which is basically to, you could call it as a data analytics platform. Everything that you need to do to understand your data better and to make a decision better. So again, this goes beyond just a linear analysis of data. It basically does everything from data ingestion, means connecting, getting data from various sources. And right now they connect to almost 200 different sources of data. Right? Because data could be spread everywhere. It comes through sensors, is an IoT. Right? It could be sitting in your other data warehouses, other softwares. So they bring in all data together. They also connect analytics to the operations, which require a different architecture. Again, they're not too much information around how they implement this ontology, etc. But what I liked about them is that, on top of data, you are actually able to put together and define your organization structure when trying to analyze the data. So there's a different field of science called ontology, which allows you to kind of create your virtual setup, organization setup. And what Palantir does, it also adds and analyze the data by making use of that. I don't know if it's making sense, but it's a little more fascinating and a different way of helping companies in analysis of data. So each layer of Foundry, and it's called multiple layers, which basically help the operators in better decision making. So let's look at some layers, right? One is data integration. Secure, flexible, software-defined data integration in hours and not months. So they have codified 15 years of data integration experience into Foundry. There were over 200 plus data connectors. Doesn't care if your data is in streaming service or is coming from sensors on IoT, maybe getting some data from satellite, geospatial, maybe getting a transactional data because the customers are buying some stuff on your website. Or if you are a process company, or if you're a manufacturing company, you got an inventory data, how your, the goods are being produced, all that data coming from factory. Your structured, unstructured data. If you are a company who's more around market sentiments, you may want to analyze Twitter feeds. That becomes more unstructured data. So they have around almost about 200 plus data connectors, and do a real-time, injection of the data and analysis, right? Next is the model integration. So you got all your data in. Now basically you run your models on it around the business logic, right? Bring your own models, or you can create your models in Palantir platform. Okay. Next is ontology. This is something which was new. I've not seen many companies talking about ontology. So what ontology does is put an operating layer for the organizations. It's like your digital twin of your enterprise, but not just the data, but how your enterprise is also structured, right? By connecting the data and models to the real world business objects, such like your plants, your distribution centers, your equipments. The ontology allows analytics teams, data scientists, business decision makers to collaborate on a dynamic knowledge asset in real time. And now it becomes much easier to relate when you layer your organization structure on top of data. Workflows. You can create analytics workflows very easily through this interface, and making decisions. Explore the various scenarios, run through various scenarios, and you'll be able to figure out what's the probability of this happening, this particular instance happening. If you're raw, say a cost of oil goes up by this percent, what's the overall impact on your production schedule? You can run those simulations, you can run those AI decision making on Palantir. And right now, these commercial segments, like I seen earlier, are being used across multiple industries, right? And for different use cases, right? Anti-money laundering, most of the financial services company will use to figure out around the suspicious transactions. Any behavior has changed from a transactions perspective, right? You use that all AI/ML, supply chain, energy, healthcare, R&D, retail. So these are the various stuff around the commercial one. Now the other one, big one, is the Gotham software, which is more on the government side. So this is what they started with their journey or their life, by building a Gotham software for intelligence industries. Right? So Gotham enables user to identify problems hidden deep within data sets, ranging from signals intelligence sources to report from confidential informants. Helps US and allied military personnel find what they're looking for. Our software is on the front lines, sometimes literally. Don't disagree. And that means so are we. Gotham's use has now extended beyond intelligence into defense operations and mission planning. And Foundry is becoming central operating system for individual institutions or industries. So two, Gotham and Foundry. So Gotham, again, get into some models of graph where you can visualize and explore a lot of data. This is to actually create Gaia, lets the user create, plan, execute, and report on operations via live map. Instead of writing it on a documentation, you can actually take an action on a live map. There are some beautiful videos around this. Dossier is a collaborative document editor. It allows users to collaborate in real time, share analysis, bring in add human analysis along with their AI intelligence, making sure that only those who are allowed to see a certain type of information can only see that information, right? Because focus on security. Stencil is around data entry, reporting, etc. We have different modules, so we don't have to go through all modules. It also includes video, very important when actually it's on the front line. Then the normal structured table data as well. And then they have an artificial intelligence system which scan billions of data points to assist investigators in the defense and intelligence sectors. So, or from a platform perspective, seems to be pretty decent one. We'll skip this approach. So what are the other companies that they are actually using Palantir? Right? Forget the government ones. We all know they are pretty very strong in the government agencies. But outside of that, Boeing is sorry, not Boeing, Airbus use them for looking at their A350 manufacturing cycle, and they were able to cut down their manufacturing cycle by almost 10%. US during the COVID, not just the US, or what's the Dr. Fauci's organization? Why am I suddenly not FDA? The organization which is where Dr. Fauci works. So anyway, NIHS? No, NHS. So at the end of the day, okay, Palantir works with the US as well as the British NHS, National Health Services, to track the supplies, help them track the supplies of all PPE equipment, etc. Right? Okay, so yeah, it already says work with NHS, work with FAA, and recently Log4j scares that we had in December. So they have a new product called Apollo, which allows you to seamlessly deploy all the changes, and basically that was used by many companies. So let's look at a competitive strengths and moats. Right, one is privacy controls, because that's how they started with, from a security and privacy perspective. We have other is bigger is we have chosen sites. You could consider it either a weakness or a competitive strength. They're very clear that our software will be used only by United States and allies in Europe and around the world. Some companies work with the US as well as adversaries. We do not. Could take it as a both way, as a strength or as a weakness, but it's a differentiating factor. I believe that this does give them some strength on from the mode perspective. What is the mode that they have? Mode that other companies will have to cross to move into these areas. One came through a federal regulations around FASA. So FASA is a little known, but yet a path-breaking law. This requires US federal government to go and acquire the commercial softwares like Palantir produces. Prior to this, most of the government work, was done by government interacting with the contractors and try to build the software from ground up. But this FASA Act was to make sure that the government agencies look to use commercial items to the maximum extent practicable. So, but agencies didn't start to follow this. So they, in fact, had to sue US Army, because US Army was going ahead and working only with the, let's say, contractors to get the requirements. So Palantir actually sued them, saying, you have to consider us, because this law says that you have to give a thought to the commercially available software rather than just pursue acquisition of custom work. So they sued US Army. Right? So isn't that a fun story, that you're trying to sue someone who you want them to be your customer later? But that's the fun stuff. And they sued US Army, and in 2016, they won this lawsuit against the Army. And they challenged that why Army is going towards developing the software, whereas Palantir has the stuff that will be better for the soldiers in the front end. And in 2018, basically the Supreme Court held the appeal and asked US Army to consider Palantir. Right? And that shows up here. This is how their revenue from US Army was coming. after they won the judgment, from $6 million all the way to $54 million. And in 2020, it is close to $80 million. So that's just the story behind is, they interesting one. They actually sued their customers to say, hey, why don't you buy from us? And they ended up winning that lawsuit. So that can suddenly the beltway contractors. So beltway means there's an Interstate 495. It's called a capital beltway. Essentially, it means to say all those contractors who basically have deep relationships around the capital. This is the beltway, the interstate highway which encircles Washington, D.C. They are now faced with unfamiliar economics or new business model because they don't produce off-the-shelf products. Most of these companies, they do a custom work, development work for a lot of these government agencies, right? And they have been enjoying their incumbent status. But now Palantir started to challenge, at least they won against US Army. So they must now develop their own software product in order to compete. And this will take years. So Palantir is now almost 18-year-old company. Right? Spent many years in building those products. So that's, I would say, this legislation essentially does turn out to be a moat for them. They use this in their favor. What else? Patent moat. They also have 475 patents and 500 non-US patents. Plus they have 800 patent pending applications. So anytime you have a patent that give you protection, so that give you moat. Certification requirement moat. Because they have been working with a lot of these government agencies, mostly intelligence community, you have to pass through a certain level of certifications. Right? Now, they have done all their homework already. So if you look at the different level of certifications and where many of the other companies are, Snowflake is right here, FedRAMP. FedRAMP is the first one which any software vendor will start to go if you want to offer services to Fed directly. Okay. My own company, we are working towards this. So FedRAMP certification, where Snowflake and Google's are. SAP is a little higher. SAP is Salesforce, Oracle. They are on IL4 SaaS. It accommodates DoD's controlled unclassified information. Then you got level 5, which accommodates CUI and national security systems, which is where Palantir is. And this is number 6 on the SaaS front, where they are not, but this is where they want to move towards. So from certification, this is a moat, again, that each of the companies have to cross, right? Give some moat. And lastly is continued innovation. This company came IPO late 2020, or was it early 2021? It was not IPO. It was actually a DPO. It was a direct public offering. Palantir direct listing. When did it was in late 2020. So since then, they've added a few more products into the overall mix, right? We talked about Apollo, which allows them to deploy faster, HyperAuto, Cosmos. Essentially, they're not resting on their laurels, continue to add more and more to their service offerings. So that's around the whole product suite and some of their moat that they enjoy. How does it make money? Customer pay them a license fee. And once you look at their financials, we'll see that they really have a fewer customers, but high value customers. Well, their software doesn't come cheap. So they basically pay us to use the software platform, and the revenue generally recognized over contract terms, which is, I think it's 3 years. So which are multi-year agreements. Yeah. Now let's look at a financial year, financials. 21 revenue is $1.5 billion. Growth in revenue is 41%. That itself, it passes the rule of 40. On top of it, they also have a cash flow margin of around 28%. So way better than rule of 40. Rule of 40 states revenue growth plus cash flow margin should be at least 40. That's how the VCs will look at saying if you want to invest in this or not. So decent revenue, $1.5 billion. Growth, not spectacular. Like some of the companies grow 80%, 100%. The fact that they have a lot of revenue coming from government agencies, I believe, is one factor in which they can't grow as fast as a lot of other companies. Those are negotiated rates. Government budgets are tight. State government budgets, central government budgets, they continue to stay tight. So that does impact some of their growth. Yeah, 41% revenue growth. Government growth is 34%. Commercial growth is only 34%. The count has now tripled. So this is where they want to focus on. Operating income grew 31%. Cash flow is 28%. Gross margins almost 80%. So not from I think they're doing a decent job in terms of from a revenue and their expense perspective. They didn't even have much of a sales team earlier. It's only when they started to focus on the commercial segment, they started to actually build their sales team. So focused on customer growth. Right now, the customers in 2020, they had 139. Overall, now it is 237, which is not big. It's $1.5 billion company with just 237 customers. Most of their contracts are in 9 digits figure, right? Tens of millions of dollars. Fewer customers, but each of them is a high value customer. Net dollar retention, 131%. This is very good. Anything above 110, 115 is good. 131 is, I would say, great. Which I like. Commercial momentum, I want to focus on what's happening on the commercial side. Because they tripled their commercial count as compared to last year, which makes sense because they were coming up from a smaller base, right? They had only 49, which is smaller, and now it become 150. So overall, I think the focus on the commercial side is helping. So now they had total 237, out of which 147 is commercial. So 90 is a government agencies. So, and I think all those multi-million-dollar projects probably are coming from those government agencies. So government side, the net dollar retention is 146%. Doing deals with government is not easy. It's a bureaucratic process. So once you're in for a long time. Yeah, so, okay. So it's already says that Q4, it's a 90, simple math. Revenue has been growing okay, 50%. I think this time it was, in 2018, they were close to $600 million. Now $1.5 billion. Gross margin almost 80%. Total employees, almost 3,000 employees. It's not a small new startup anymore. It's got 3,000 employees already in, 17-year-old company. So that's on the financial side. It's decent. I'm more interested, and my whole thesis around this will be based on a commercial customers and how they can quickly ramp up the commercial customers and move more and more revenue, increase the pie of commercial revenue in the overall total revenue. That would be my thesis and will keep me interested in this company, and not the government side. Competition, mostly around the internal software development efforts of potential customers. When I say internal software development, which would also include their customers working with the vendors. Right? And let's look at a management team. Alexander Karp, 52. He's the guy with, those big curly hairs, looks like an evil person kind of a thingy, but it was interesting to see something refreshing, something different around their video of their Q4 results. Basically, it's talking, and the recording is happening when he's in a golf course. And what a golf? Yeah, he's having in a golf course, holding a golf club. And sometimes what I also heard that he'll talk about, and so in any of the earnings, first there will be a few minutes dedicated to CEO talking about the business, right? Most of the time you will see CEO in a suit talking to and addressing investors, but Alex will be addressing from a golf course. Sometimes he'll be addressing in a from a ski slopes, and wearing all those ski gears. It's a little different. So Stephen Cohen is one of the founders. Sham Sankar is a COO, has been with Palantir for 15 years. So pretty young team. If you look at except the CEO, everyone else is under 40. So these are the people, might get featured under, like, which company does that? Magazine does. Is it Forbes or Fortune 40 under 40? So these guys probably will a candidate to feature over there. So that's a management team. Current valuation, still, it is expensive. It's not cheap, even with where the stock is right now, which is at $12. Oops, let's say Palantir, $13. I looked at morning, 12.8, but 12.8. Still, from a traditional valuation perspective, it's not cheap. Still a little expensive. 16 times of your sales it is expensive. So that's sort of on their financials. My overall thought process, this is, I'll be bullish when continue to grow the commercial side, because if it is solely based on the government side of the business, it won't have any pricing power. Number two, then its valuation should be more based on the government contractors, say Booz Allen Hamilton, and other companies that provide services to government. Then it more becomes like a services kind of company than becoming really a product and a commercial company. And most of the multiples that we see, that is according to the companies, software companies, are because they're working in the commercial side. They do enjoy some of the tailwinds if you're on the commercial, if you have more business coming from a private companies than the government companies. So yeah, if they continue to grow on the commercial side, that makes me bullish. But the tech is unique, built over almost 17 years behind this, and they do have a business tailwinds. But something that to watch out for is the ESG concerns with the association with government agencies, and some funds may not even want to invest in this. So if you look at their investor list, like, I haven't heard of those names before, because the normal, the investors that we have used to hearing for may not want to get associated with this company. So you pick your sides. This is very this company is not trying to please everyone. That's what I figured out when looking through this is not everyone's cup of tea. This is what we are. This is what we stand for. This is what we will do. If you like it, great. If you don't like it, you have other choices. That's how the feeling I got while reading through and trying to understand this company. it will could stay volatile. I mean, it was on the radar of a lot of retail investors. ARKK, or I don't know if it is the ARKK fund, but ARK Invest is also a big holder of this company, right? So maybe my strategy would be to maybe sell put if I want to acquire the stock, because I want to give myself room for error and then reduce the cost basis. This is not the company which will become, top 10 in my portfolio. But if they continue to focus on increasing their commercial side, that's where I will become more bullish on this one, doing maybe increase it to 2% of portfolio. So that's all around Palantir. Sam says ARK sold, but they keep on buying and selling. Yeah, right now they might have sold. Probably they'll buy more. But if you look at the institutional holdings, I mean, they do have Vanguard, and because some of those funds from Vanguard, but ARK also featured as one of the big holders of Palantir. I don't know what the latest one is, though. That's Palantir. Hopefully, it gives you a little more insight to make a decision of whether you want to buy or not want to buy, or what to do with your position if you already have position in this. But premiums are rich in this company. So if I look at Palantir, it's a good from option selling perspective. And if I look at the next expiration cycle, 14th is too close. It's 26 days. If I look at 20th May, for at the money, which is around $12 of strike price, you could get, say, $0.06, 60 days away. You get, say, $0.07. Let's pick up the mid price. And for a $12, that means 8.9%. 8.9% reduction in cost basis if you get assigned, or 8.9% return if it stays higher. Even if you don't have a portfolio margin, but your option is only entirely on a cash, you can trade only on the cash. It blocks $1,200 to sell one contract, and you're getting $107, which is almost 8.9% return for 60 days. Multiplied by 6, 53% option premium return. So from an option perspective, because this is little volatile company, the premiums are higher. So if I were to do in this, I would rather start with an option. If I'm okay to buy at 12, at least, I'm kind of a guaranteed 8% return in 60 days. 8% is the return or reduction in cost basis. Let me put it that way. It is a reduction in cost basis if I get assigned. If I don't get assigned, then I made my 8.9%, 9% in 60 days anyway. So this seems to be a good instrument from a option perspective, not buying. If you're buying it, you're actually paying 8%. But selling perspective, something that if you're really interested in, that would be an idea for an option trade, if you're interested and bullish on this. Cool. So I think that's it for today, unless you have any more questions on Palantir. But yeah, I didn't realize, I mean, I have very small position of some stocks somewhere, but the premiums are really juicy. And I don't know if it is just now or it is like this. 70% IV is high. But we'll see. Yeah, it is almost, even if I go till the end of this year, still 68% volatility. is higher than what I see in some of the other stocks. So good from a premium selling, good for premium selling strategies. Are you planning to have a very long-term holding pattern for PLTR? Most of the stocks which I own, I have that long hold pattern for Palantir, at least for the minimum for the next 5 years. But I do plan to, maybe sell options on this one for stock acquisition side, because if I don't get acquired, at least I made 8%. I mean, with I have a portfolio margin, so I won't even have to block $1,200. For me, it will be like I'll be blocking $200, and it might. Let's see, how much will it block for me? $200, and I'm getting $100. It's like a 50% return for those who are holding portfolio margin. Right. But even if you don't have portfolio margin, you have a cash, you don't even have a regular T margin, reg T margin, but even you just have a cash account, still 9%. If you're okay to buy the stock at 12, that's the strategy. There we go. One option strategy we talked about. But to me, this looks interesting, right? I already spent a few hours on this, so why not put some dollars behind it? Cool. Okay. Someone asked me for my email address. I said. All right. So that's finished up Palantir. And yeah, that's next. I had a few charts. If you're interested, we can talk about it. I generally don't pay too much attention to the pricing, but I know some people do want to look at it. But yeah, usual stuff. Some of the positions in the portfolio, nothing interesting. So we already talked about all the interesting stuff. Okay, I think, yeah, I'm also tabbed out 12, almost 12:40. Any other questions? So here's what I was also thinking is maybe we should do once in 4 or 5 weeks, maybe one deep dive. I have to note down somewhere to just make sure that I do some deep dive, maybe do some 1 week we bring some study, 1 week maybe we bring some option strategy, 1 week we talk about I don't know what, so that we cover all the aspects, right? I think the last deep dive we did was for Viva Systems, which is 4 weeks, so it's okay. Today we did Palantir. But I don't want to go like a few months and not done any deep dive. It means we are not learning. Cool. No further questions. Then let's call it a day here. Thank you everyone for your time today. Thank you, Sam, for your suggestions to talking about Palantir. I enjoyed looking at this company. Hopefully you also gained something from that today. Welcome, Sachin. Welcome, Archana. Welcome, Sam. Time for some lunch, and we got a birthday party to attend today with kids. So looking forward to the rest of the day. Can we cover commodity deep dive some week? Oops. So commodity deep dive already did, not very far back in the past. Sachin, I don't know, maybe you missed that session. But I talked about commodity maybe I think the closer to the end of last year, to look at various commodities and talked about commodity super cycle and the fact that we have been underinvested. And last one month, that turned out to be true. Right, I had no idea about this Russia-Ukraine invasion though, but the fact that we've been underinvested, that really showed up in last 1 month. Okay. Cool. So recorded session. Yeah, recorded session is there on the website. Yeah, but it's available. It's available, but behind the paywall. Unfortunately, because I had it open and then people start dropping off and not attending the sessions, so I had to put it behind the paywall. But yeah, recorded session is there. In fact, all the sessions, all these recorded sessions are available along with the documentation, both. Yeah, almost now, probably, yeah. Even the docs will be there, but it take me a few days to upload it. I think it's what, $20. Again, the reason is make sure I still have a folks. I want to have these interactive sessions. The idea is not to just meet and upload the video. The idea is I want people and you to come and participate and talk about this. So how you can access them? Hold on. It is there on the, let me just show it then. So, so on my website, we have a weekly webinars. This is where you'll see all the previous recordings, and say we did which one, ASML, right? Semiconductor. So you have the recording of that semiconductor and the documents that I go through here in this meeting. That will be available, and so will be the recording of this session. Right. So it's available on the website. Cool. All right. Thank you, everyone. If you're interested in crypto, we meet every Thursday and talk about cryptos. But I'll be here again next Saturday to talk about some stocks and what I see in the markets.